Hi Jay, welcome to Venture with Grace.
Hey Grace, thanks for having me today. How are you?
I'm good. I have a major scratch mark on my face, so which I'm trying to cover using my hair. But anyway, you said that I'm real
No,
good. How
you're
are
good.
you?
You're good. No one can see it. No one can see it.
Perfect.
It's
Perfect.
yeah. It's one of those things where like we're always more self-critical about ourselves, but no one really notices our flaws, which is kind of funny. Like we
Thank
we see
you.
them deeply,
True.
but no one else sees them.
True. Agreed. Okay, so I want to start with, you're the class president of Elo University. I'm sorry, like this is such a random note, but like I was literally browsing through your resume. Let's start with like, how did you start your entrepreneurial career? And then this is like before Feather, and then maybe we could talk about Pointhound after, like some core lessons that you've learned early on in your career.
Yeah, perfect. Yeah, so I started. It's funny. I guess I started in college, back around when like Facebook was getting up and off the ground. There was something really alluring about it, I guess, about being able to kind of pave your own path and build your own thing and not have to graduate college and go directly into the like workforce. It just wasn't for me. I've definitely been someone who doesn't fit neatly into boxes, and have needed that like freedom and flexibility in my life, I think. So yeah, during college, I started my first company, and by starting company, it's like I look back on it now, and I make so much fun of it. I mean, I had no idea what I was doing. Right, I did pretty much everything wrong. I mean, even named the company horribly. So I think the most important lesson that I took away from building a company, or at least my first company, in college and then just after college, was just to try something.
Mm-hmm.
For anyone who's younger who might be listening, who's in college, just graduated, or is trying to transfer to or do something new with their life, just try something. Just try it. And ultimately, you learn a lot about yourself. You learn about what you like. You learn about what you don't like, what you're good at, what you might not be good at. Um, and yeah, there are a lot of trials and failures along the way, of course. Um, yeah, I learned a lot. First company was actually a grocery delivery business.
I saw that.
We
Yeah, the
were
local bee thing.
local bee, exactly.
Mhm.
Yeah, we were early. I mean, we were just before Instacart, and I think we were about a year or two too early. People hadn't really started to use their phones to do much more than like geolocate and stuff.
Mhm.
So I thought, Webvan was a decent product, but operationally it really sucked. It was very intensive.
Mhm.
So we wanted to make something much lighter. But again, as a first time founder, I had no idea what I was doing. So I did everything wrong. Maybe I did a few things right, but the company we ended up doing probably a couple 100,000 in revenue. Launched in New York, grocery delivery, but I was not the right person to build that company at the stage of my career I was at. So Instacart came along probably a year or two after us, and and made the thing that I was hoping to make. And
Mhm.
so I think that lit a fire under my butt too, to be like, well, this was my idea, and I also tried to execute at it, and I couldn't, or I didn't do it well. So yeah, it was a really helpful lesson, I think, in figuring out what you're good at and trial and error, etc.
Mm. I wanna maybe like we could fast forward to the Feather era, which is like I feel like you started multiple companies after that. You were a head of logistics and coffee buying for a company, and then you co-founded another company, in the restaurant space. And I wonder, so like since like you got into YC and then Feather is like currently already acquired, and then you guys raised like over $76 million from a lot of like top funds. And I feel like for a consumer company to succeed big, it's like very hard. And maybe if you could talk about like the lessons that you've learned through maybe going through YC. I don't know if that's like a major milestone for you, but it seems like, based off your prior track record, this is like the first big success. And how do you think about like you have done things differently versus the first two times?
Yeah. First few companies, again, was a lot of trial and error. Local B, we ended up shutting down, and that was the grocery delivery company after a few years, really trying.
Mhm.
Second company was a product that helped people, get free. It was basically a time-based, location-based like discounts product for bars, restaurants, retailers who could turn on and off anytime they wanted to drive in traffic. That one did pretty well. We got about 50,000 people in New York using it, and someone acquired it. It was a very small acquisition, but I was able to see end to end,
Mhm.
like a consumer product that took
Mhm.
acquiring, retailers and then acquiring users and building
Mhm.
this marketplace. Um,
Kind I wanna double check with you on, like, how do you get 50 users in NYC? Like, I mean, I'm sure the product's great, but, like, I mean, how do you kind of, like, grassroot it at the beginning to, like, get this thing into people's hand?
Yeah, I think in consumer, it's very different than B2B.
Mm,
Consumers are very fickle. We're not, as humans, we're not rational in how we make
mhm,
decisions. We're very
mhm,
emotional in how we
mhm,
make decisions, even if we want to be rational.
mhm, mhm,
Um, we tend to err towards the emotional way of deciding. So when building a consumer business, if you can tug on any kind of emotional strings that make someone feel some certain way,
mhm,
or lead them to lead a horse to water,
mhm,
that generally leads to more organic growth and viral adoption. So for this first company, the concept was interesting to people. It
mhm,
was like, hey, I can get a happy hour at any hour um,
mhm,
of the day. It could be 7 p.m. on a Friday, but if a bar or restaurant is slower, they would be welcoming you in with a happy
mhm,
hour. Or a Michelin star restaurant that had extra seats available, they could say, you could come in and get this portion of your meal for free or 50% off or whatever. It was interesting to a certain demo in New York, like
mhm,
20 things.
mhm,
So I think that's kind of critical in building a consumer business, is just focusing on a product that is solving a problem for people. In this case, it was
mhm,
young people want to eat and drink in a city, but it costs a lot of money. And how can you do
mhm.
that for more affordable price?
I actually have a piggyback question on that. I feel like I see a thread in your like entire journey. So it sounds like you're always building for the people who are like budget conscious. And I feel like if I were building something, I would try to build for the non-budget conscious people. But I feel like it's like harder to sell to them just because of like they are less likely to purchase or spending big amount of money, which means your margin will be generally like not as lucrative as like the guys who are selling Louis Vuittons, right? So how do you think about like that? Because it seems like Feather is for like the young people who move into a city and then like deliver furniture to your door. I guess the yeah, lazy and cheap younger people, but and then for the same thing as like Pointhound, like which is like budget conscious people. I'm not saying budget conscious, like it's like I think rich people are budget conscious as well, but like it's like, I think based off the margin of the business, like I would assume like, if you're selling um bigger items to the people who can afford the more expensive and things, it will be more lucrative for you. Just out of curiosity on like how do you kind of like come up with these ideas and then what convince you to build this?
Yeah, yeah, yeah. It's funny. It's funny that you noticed that thread. I actually haven't, I haven't noticed that myself. But you're totally right. I think what I look for when I'm building a company is something that could have mass adoption,
Mm,
and something that is not a 1% product, but something that's more of a 99% product that has
mhm,
a much larger TAM. That's always been my focus, is doing
mhm,
is solving problems for the masses rather than like a
mhm,
certain specific small niche of folks.
mhm,
Those businesses can get a lot bigger. They're really hard to crack, of course, but if you do, you can build something pretty substantial. So
mhm,
with Feather, it was or kind of with any of them. Feather it's a furniture rental product.
mhm,
Furniture rental existed previously, but most people know furniture rental as a product for home staging, where you need to sell your home and you need it to
mhm,
look good, so you rent furniture to stage it.
mhm,
We were looking at the problem, which was young people are moving around in cities, between cities, or even within cities, and there was no good way to uh, get furniture, to get rid of your furniture everyone had to buy it and either throw it out or buy it and try and sell it.
Mm,
And it wasn't working for most people. So our approach was, why don't we help you get it set up, deliver furniture to your home, make it really easy for you, and only charge you monthly, so you don't have to pay, $5,000, $10,000 up front to furnish your entire
mm,
home.
mm,
So yeah, so I mean, focusing on a much larger demo has always kind of been my approach to building companies. Now, that's not necessarily how you want to build a wedge into the market. Like, you
mm,
don't necessarily want to say this product is for absolutely everybody, and
mhm,
everyone should use it. When you're trying to get your company up and off the ground,
mhm,
you want to figure out your wedge for a certain demo and go after
mhm,
that demo, nail that, and expand it outwards. But as far as like the broad applicability of the companies I've been working on, yeah, I would say like um, they are more for the 99% of folks rather than
mm,
the 1%, which does maybe there are sometimes margin concerns, but if you're building something big, like margin and an absolute number, you can make the thing work pretty well.
mm. So, like, who are your, I guess, like the target audience or like the first group of people that you're targeting? And I want to say, like, maybe we start with like the point hunt. So, like, because you guys are trusted by the points guy, and how do you get, like, let's say the points guy to recommend your product, or maybe even just getting featured by them or by getting invested by them? Like, how do you think about, I guess, like, who is the target audience, and how do you reach to these, I guess, like, people or like channel partners to partner with your product?
Yeah, yeah, it's a good question. I think like there are a few different ways to do this. Our approach has been for Pointhound, just to give a little bit of context to what it is that we do, and then I can answer that question. Is we help people earn and redeem their credit card points for free
Hmm.
flights. So we'll basically
Hmm.
help you, take credit card points that you may have already earned, or help you get cards so that you can earn lots of points, and then turn those into free flights. The way that we help you do that is by taking your points and actually transferring them to airlines rather than booking through the credit card portal like Amex or Chase.
Hmm.
If you transfer to the airline, you'll get between 2 and 15 times the value of your
Hmm.
points, just by that like one simple step. And our product helps people figure out how to do that, pretty reliably and pretty simply. In order to acquire users, there are basically like two different paths you could take. In the market today, there are a few pretty successful small businesses focused on the folks who are credit card point nerds already,
Hmm.
and the people who have like figured out how this work and they absolutely that's probably about 1% of the population, who are
Hmm.
using those tools, who are paying for them because they like are really obsessed with this. They love
Hmm.
flying business class to Europe for free or Asia or whatever. Um, our product again is that in to the earlier point is designed for the other 99% of folks who have
Hmm.
not yet figured out how credit card points work and are
Hmm.
just getting started, or beginners who actually have no idea how it works.
Hmm.
So our approach to those users is to design and build everything for the beginner and to focus specifically on the beginner, where
Hmm.
other folks really are not. And so that's the lens that we look at, and that's like that target demo we're really going after are the people who don't understand how this works. And in building for them, you have to build a completely different funnel. You have to build a completely different set of products, and the way you look at the world needs to be like very different than something for someone who already knows how this thing works.
Mm. I wonder, so when you're thinking about building the product from like day one, what does that mean? So like, is that like just you have like a designer who designed like the UI of your thing or like on Figma or something? But like right now you're very, I guess like you're a third time founder, and then you already have a track record and then some like cash raise before everything. I'm sure that you can hire like a designer to design the whole website and then ask people to try. But I guess like from the day one perspective, like who do you talk to as your potential customers? And then do you stalk people on Reddit, or like how do you kind of see the threat, or like, obviously you yourself probably like a potential user of this thing too. So I guess like what does a day 1 to day 3 kind of look like to build this thing, to like get feedback or like talking to more customers? I guess like what's your actual like action strategy as like a third time entrepreneur?
Yeah, it's a good. So I get inspiration from big problems that either I've seen or that other
Mhm,
people have talked about a lot.
mhm,
And people are terrified of personal finance,
mhm,
and they really just don't. They don't. They're not great at solving their own like personal finance problems.
mhm,
One of those major problems is like we're earning 100 million people are earning credit card points, but
mhm,
nobody knows how to use them. We're taking our points and turning them into 100,000 points you might have in your Amex account. We're taking that and turning it into cash back, which is the equivalent of $600. You
mhm,
can take those points and turn them into travel through the MX portal, and that's worth
mhm,
$1,000. Or you can take
mhm,
those 100,000 points and turn that into a round trip business class flight to Europe, which would
mhm,
be the equivalent of like $10,000 of value.
mhm,
People just don't know how this works. So the approach is really focus on the people who like. We basically validated the hypothesis that most people don't know how this works,
mhm,
um, which was quite easy to do. I mean, I just asked friends, I asked around, and most
mhm,
people just have no idea about what it is that we actually help them do, or what we
mhm,
could be building to help them do.
mhm,
And from there, it's really like, taking a page out of what YC teaches is just making something people want. And
mhm,
and if we're able to deliver 10x value of your points,
mhm,
and it takes an extra 2 minutes to go through that process, and you and your partner or you and your friends could take a business class flight to Europe for free, with the same amount of points as $400 worth of points, like people will do that. So
mhm,
that was our approach, was really focus on the beginner, focus on figuring out what problems they have. Some of those problems are education,
mhm,
because this is a topic that people don't really understand,
mhm,
or haven't tried to understand. So we make bite-sized content that people get to kind of learn over time. And then we made a very simple and intuitive user interface that is how people are currently searching for flights. So we didn't want to deviate from what people are doing today, because if you're adding another layer, if you have to add education plus a new UI that they haven't used before, then it confuses them even more, and then they'll just drop off.
mhm.
So we've been pretty successful at what we've built so far. So hopefully we can keep that going.
Yeah. So how do you think about from the business model perspective? So I know that you said on the other podcast, well, not you, but like I guess your investors said on the other podcast that like it is you're like taking a financial arbitrage. Like, a lot of people probably don't like actually understand how the points works. Why don't we start with like, how does the points works and in the back end? So for example, who is giving money to who? And then why is it like so cheap to like fly using your points? And like instead of like, gift card, maybe you will get like a lot lower gift cards. And then like who is even giving out these like gift cards? It's like the credit card company, or is this like the airline company? How do everybody work with each other? And then how do you work with the rest of the ecosystem?
Yeah, this is a great question. This one will take like 30 minutes to answer. So I'll do the like I'll
Okay.
try and do the
Okay.
3 minute. I'll try and do the 3 minute version.
Okay.
So when you swipe a credit card, you
Mhm,
earn points. So if you have an Amex card or a Chase card or Capital One card, you swipe your card at a merchant, you earn
mhm,
points. That's basically a reward for being a loyal customer of that
mhm,
bank.
mhm,
Um, you earn those points and you keep them inside of your Chase account, your Amex
mhm,
account, or say your Capital One account.
mhm,
Um, from there, you can do whatever you want with those points. You can
mhm,
do, well, not whatever you want. You can do what the bank will allow you to do with those points, and that would
mhm,
include turning them into cash back at the worst rate, the worst use of your points, or buying gift cards with your points, which is also a really bad like conversion or price.
Mhm.
Or you can take those points and you can actually transfer them to other merchants if you want. That seems confusing. Why would you do that? But transferring your points can net you significantly higher value if you find a really good deal using your points at an airline or a hotel, for example.
Mm.
The way it works behind the scenes is when you are swiping your card and you're earning points, Chase is effectively charging the merchant, let's say 3%. It's anywhere between like 1.5% and 3%. But let's just use 3%
Mm.
for a number. When you swipe your card, you're basically paying, the merchant is paying a 3% fee on top of the, let's say you bought a shirt for $100.
Mm. Mm.
The merchant's paying a fee. They can either pass it along to the user or by baking that into the price, or they just have to pay that and net that out of their margin.
Mm.
So when that money comes, or when those points, or when that money comes back to the network being Visa or MasterCard or Amex, the network then gives some of that money to the issuer, which would be Chase, and keeps some of it for themselves. So they're kind of like splitting that merchant fee that they're taking. And as a way to keep this thing going, because they're effectively charging the user, they're charging the merchant 3%, but they're in some ways charging the user 3% to swipe their card. But that's a very debatable topic. It's like going through Congress right now. They want to incentivize you to use their product, which is a credit card. So they give you points or cash back or whatever back as a rebate or as a reward for using the card. It incentivizes you continuing to use, say, this American Advantage, American Airlines card.
Mhm.
So that's like what the ecosystem looks like from a high level. And Chase is saying, okay, cool, here's some points for you. Stick around, keep using our card. You'll get 2 points for every dollar you spend if you spend it at restaurants, or you'll get 3 points if you spend it on travel, or depending on your card, it all changes. So it's kind of unnecessarily complex. They like that because it helps make people just say, okay, screw it. I'm just going to turn my points into something that's not as useful, because it's kind of confusing. So what we do is we help make this dead simple through simple UI and solve that problem for people and help them get the maximum value out of the points.
Mm.
There are a few other areas we can talk about, like how when you fly on an airline and airlines are accepting points to book a flight, or accepting miles to book a flight, they're really doing that to fill excess capacity in their planes. So they might have a plane that's only 50% full, and every day that gets closer to the date that you're going to be flying, the cash price increases.
Mm.
But they might over here have this outlet center of allowing you to book the flight with miles, your American miles or your Southwest miles or whatever. And they want to put butts in seats, and they're willing to do that for a very cheap price so that they can make the plane even more profitable.
Mm. That's a really good design, but I know that hotel does this too, but I wonder, so how do you talk to the airline, or do you talk to the credit card company, and how long has this been happening, and why are they giving these percentages, and they have to charge the customer? Is that just the bank association just come together and then say, hey, we're gonna charge these company, every bank have to charge all together, so that's how they make money? Or how, I guess, how does the incentivized system actually design at the very beginning? Why is this happening basically? And then the other part is I guess do you personally have to talk to every freaking airline to get the start? Or is this all these financial products, you can be an affiliate, and then you click a link, and then like people use your link to sign up, and then they got, credit card bonus or whatever. Like, how do you, or I mean, you got money from the referral fee, or I guess like how do you think about the business model on your end, or like how does it work in the back end generally?
Few good and big questions. Okay, I'll try and answer the first one, which again is very complicated, and I would say there's a lot of disagreement on whether merchants should be charged the credit card fee of around 3%, or if there should be lower merchant fees or no merchant fees. You see that in Europe. Well, in Europe, merchants are charged somewhere between like 0.5 and 1% to swipe a card, and in the U.S. it's around 3%. Let's just call it. It ranges, which is 3 to 6 times what's happening in Europe or some other countries. So the very short answer is the networks. So that would be Visa, MasterCard, Amex. Like they want this to keep going because they're making a margin on every swipe that happens, right? Let's call it 1% of every swipe that happens. They get to just keep that for providing the rails that they've provided. I mean, it's kind of like Stripe. Stripe works with the networks, et cetera, but Stripe is also like a layer on top of the networks. So yeah, and then there's the bank. The bank wants this to keep going because the bank is earning, a percentage as well on every swipe. And they're called the merchant, or the issuer, sorry. And then there's the merchant who generally doesn't want to be charged 3% because either they have to pay that or they have to effectively pass that along to the user in the form of the product costing, say, 3% more, and breaking that merchant fee into the product. Now, how does that change, or what could that look like over time? There's a bill in Congress right now that I'm somewhat familiar with, and that just kind of keeps getting pushed, that is meant to basically significantly reduce and remove merchant fees, because merchants are saying, oh, this is really bad and you're overcharging consumers, and this is all just for these duopolies to take lots of money from the user. And on the other side, the banks and the networks are saying, we're providing a service, and if you get rid of this, then the points programs are gonna dwindle, and the user is not going to be getting the same kind of rebates back that they were otherwise getting. And you don't want that, because we issue 10 trillion points each year, which is the equivalent of over $100 billion worth of value in just the US alone. So, and the user doesn't want that because they're getting points and miles and stuff and cash back on every purchase they make, right? So there's this like weird fight happening. I don't know how it's going to shake out, but I can't imagine that this is going to go away, because it is such an ingrained part of credit card issuers, merchants, and networks, and as consumers, we don't want our free rebates to go away. So I don't know if that answers the first question, but it is, it's a very kind of complex system. And your second question was,
yeah. By the way, I want to shout out, hi, Steven or Stefan. We're gonna address your question in the end, and then hi, Dragon Love. Yes, Dragon Lore. I don't know. Like, anyway, yes, you can ask questions, and then we'll address live in the end. Okay, so I want to ask, like, so the original question was like, how do you, I guess, like, so how does your company work with these like either credit card ecosystem or the travel ecosystem?
Yes. Yeah, sure. So what we do is we partner with credit card issuers. So we help users earn and redeem their points. So there's two parts to Pointhound. We help you get the right cards so that you can earn lots of points. We want to help you figure out basically however you're spending. If you're spending a lot on restaurants, on groceries, there is a great card for you that we would recommend based on how you spend. If you're spending on other things, we might have a different card to recommend you. We partner with the credit card issuers, and the credit card issuers will pay us anytime a user signs up for a card through one of our links on our website. So
Mhm,
the earn side of the equation right now is part of the ways that we're earning revenue. On the redeem side, meaning like you've earned points and now you need to redeem them, like what are you going to use them for? We've built a whole set of free search tools that look like basically Google Flights, but for points.
mhm,
And it helps you find and book flights for free using your
mhm,
points at 5, 10 times the value that you would otherwise be getting uh,
mhm,
out of your points. So on that side, there are a variety of ways that we're working on monetization as well, and love to talk about those more as they roll out. But
mhm,
that's where we sit in the ecosystem. And we on our site we'll just pass users through to the airlines to book the flights.
mhm.
So we find these flights for the user. They don't book through us. We basically, like any other OTA, send the user to the airline to book the
Mhm.
flight.
Mm. But do you got like rebate or like do you got like money from sending them there? Is that like affiliate rate or
On the redeem side, when we send a user to go book a flight with points through the airline,
Mhm,
no, airlines don't offer commissions on points bookings. They do
mhm,
offer commissions on cash bookings.
mm,
So if a user clicks through and books a flight with cash through an
mhm,
OTA, they do pay out. Um,
mm. So I guess like what's a moat of the business? So like since I feel like there's a lot like the blogs since I feel like we're talking about the points guy at the beginning, so like he obviously very successfully built a form business based off these like affiliate stuff. And how do you think about like having moat of a business like this?
Yeah, ultimately there are a few modes. One is the data that we
Mhm,
collect. So we're able
mhm,
to basically create an ecosystem where a user can come onto our site and run a search across, let's say, 150 different airlines in real time. There are no APIs that all of the airlines have because this is such a nascent market. So you can't actually, as a company, go in and partner with all of the airlines, get
mhm,
API access because they don't have API access for
mhm,
points. There's no GDS, which is like a, a system where you can plug into to find and book flights with cash fares. That doesn't exist in points. This is a
mhm,
very, very young and nascent market. And so what we do is we go out, we pull the data from the airlines' websites and surface that to the user in real time when they come on our site. So
mhm,
access to that data is unique and is very difficult to do. So that's one. I think the other is a moat. A moat exists when you can build a suite of products for people that makes it
mhm,
difficult to switch from because you've gathered enough information about them. They feel comfortable with your product. They really love your product. And the switching cost of giving that information to someone else when you have like a full suite and ecosystem is difficult to match. So yeah, we have you know hundreds of thousands of people have used our product, and it's a fairly sticky product, which is great.
mm. I guess I wonder another question is like, what's a risk of this oh my God. Hi. We'll address your question at the end, Dragon Lore. Okay, so I wonder, so like when you're thinking about the risk of the product, so it sounds like, right now maybe there's like political risk because of like, the government may change like a certain things. And then like another question is like, what if the credit card ecosystem or like the um travel ecosystem, they just change the policy altogether, or other things. So for example, let's say um like I guess like competitive landscape. I feel like a lot of, as you mentioned, you guys are collecting data, but I'm sure these other, trips, booking.com, like everybody is collecting data somewhere. Also, same as like, on our podcast, there were other founders that are building the Rakuten equivalent, or like, maybe using different credit cards to get different points. That's like another, kind of like popular um,
Yeah.
innovation in the space. Like, can you talk about like the competitive landscape? Like, what are some major trends that you're seeing people are building in the space, and why your approach is like unique
Yeah.
applied into this?
Yeah, sure. Yeah. So bringing up the like regulatory risk is interesting
Mhm,
because the funny thing is airlines are actually banks. Airlines are banks that happen to fly planes. There's a
mhm,
really interesting YouTube video. I feel like we should drop in
mhm.
some notes or whatever.
Drop it. Yeah.
And I'll share that. I'll share that later. But
Mhm,
the essence there is during the pandemic, all of
mhm,
the airlines needed bailouts from the government because no one was flying and they would have gone bankrupt, right?
mhm,
In order to get those bailouts or those investments, they had to put up collateral in case they weren't able to pay them back.
mhm,
What collateral did all airlines put up? They all put
mhm,
up their loyalty programs, meaning like the points and mileage programs that each of them have, like American Advantage and Delta's Sky Miles, etc.
mhm.
Um, one airline's loyalty program was valued at like $25 billion.
Oh, wow.
But publicly traded, the market cap of the company was $8 billion. So you sit there
Mhm,
and you think, wait, so if your loyalty program is worth 25,
mhm,
but the company is worth 8 billion, does that
mhm,
mean flying planes is worth you know, negative $17 billion? And the answer is like, kind of, yes. So
mhm,
where airlines are actually profitable is in the way that they create their loyalty programs, issue
mhm,
points, um, and let you redeem those points or miles for
mhm,
flights. They're making many, many billions of dollars on on this system alone. And so
mhm,
the system can't go anywhere because if the airlines were to get rid of those or the government told them they had to get rid of them, whatever, the airlines would just completely shut down. Like
mhm,
they're not profitable at all. So they'd either have to like 3x their prices,
mhm,
the prices of flights, which consumers wouldn't, really allow, right? Or the other option is to keep these programs, which is
mhm,
basically what the airlines and the banks are all saying is
mhm,
you really can't and shouldn't get rid of this because this is how the airlines are able to provide value. It's possible
mhm.
that someone actually dropped the
Yeah.
YouTube video, which is
Bill Lair. Yeah,
yeah,
sorry if I pronounced your name wrong, but yeah.
totally.
Okay. Mm,
Yeah,
okay, thank you for dropping this. Okay, so I wonder, so when you're thinking about, um, like, I guess first of all, like, how do you figure out this, like, unique situation exists? Sorry, trying to, like, think of the right term for this. So how
yeah.
do you think about, like, this ecosystem, and then how do you kind of find out about, um, this arbitrage opportunity, basically?
Yeah, yeah. My founder story here was at Feather.
Mhm,
We were purchasing between $500,000 and $1 million worth of furniture every month
mhm,
to scale up the business. And to do that for the first 3 or 4 years, we were actually able to purchase that furniture on credit cards. Not
mhm,
because we didn't have the cash, we would pay it back, but so that we could earn points.
mhm,
So let's say we were earning about 1 million points a month
mhm,
at any point, right? By
mhm,
at some point we had like 20 to 25 million points,
mhm.
which is an astronomically high number of points for the average person. And it was then that we were using them for things that were just really stupid, like gift cards. We would buy Uber gift cards so that we could, not have to pay for Ubers, or we would buy gift cards for Delta flights or whatever at a really bad price.
Mhm,
I was doing really like dumb things with the points, and it was while building Feather that I realized that I had no idea how this worked. As I started figuring out how points would work and how they could go
mhm,
much further than all the dumb things I was doing, that was when I realized that like this is actually a really big opportunity. When we sold Feather, I actually joined a venture firm and started investing full time. It was
mhm,
with 645 Ventures. Shout out to
mhm.
them. Awesome,
That
awesome.
yeah. Their managing partner were on our show too.
Yeah,
Yeah.
yeah, that's right. Yeah, Namdi was on the show,
Mhm.
uh, and I was investing with them for about a year full time, just like kind of leading seed Series A consumer deals,
Mhm.
and the idea for Pointhound kind of came together while at 645, and
Mhm.
I love working with the team. I love being in venture, but the opportunity was just too good to pass up when I saw basically like how much money Credit Karma and others were making in credit card
Mhm.
affiliate revenue. Credit Karma was making $2 billion a year in affiliate revenue
Mm.
from just getting their
Mm.
users to sign up for cards and offering all of their tools for free.
Mm.
And so we took a page out of their book, and we offer everything we do today for free, and get paid in a variety of other ways,
Mm.
but not by charging our user.
Mm. So before we jump into the AI and the question of the audience asked, I want to also ask about like how do you market in your own company? So like I saw that on IG, you guys follow a big some like big influencers. I guess like besides like I guess like chatting with the you know the influencers on TikTok that are doing talking about like how to save money. That's a vibe. And then like how do you think about go to market strategy for stuff like this? Because I feel like for a consumer company, the biggest thing is it's unpredictable and it's hard to attack like everybody at once. And then the check size of each person is like generally small. And how do you think about the go to market strategy as a whole? And then especially in marketing, because obviously I feel like any consumer product in the end is like a marketing game.
Yes. Yeah, I completely agree. I think one of the reasons why this is such an interesting business is because it is naturally viral. The work, like, we've grown completely organically from day one because when someone figures out that they can take their points and get a free business class flight to Europe for 40 or 50,000 points, which is usually like they can usually get like $350 of value out of that. They're getting 10x the value. Once they actually do that, it becomes really useful to them and really exciting, and they love to talk about it. Part of it is like the consumer psyche. Um, we love we love to talk about deals. Like, the majority of folks like to talk
Mhm.
about like deals they got on things and discounts, and almost like brag a little bit about it. Like, wow, I
Mhm.
just here's a picture of me in business class flying to Europe, or I'm now flying in economy for free all the time using my points. Like, I can travel all over the world. Um, and so our users are telling their friends, because probably, our tool is completely free. We don't charge people to run these searches or to figure out how this works. It's a free set of tools. And so we've been relying pretty heavily on word of mouth, um, fortunately for us. And yeah, we have hundreds of thousands of people who have used our product, and it's all grown pretty organically, which is nice. So I think the point there is, when you're building a consumer business, it can cost a lot of money to acquire users.
Mm.
At Feather, it definitely cost us a lot of money to acquire people. We were paying two, three, four, $500 to acquire a user. Here, we're paying almost nothing, and that was why this is super exciting for me, especially in the early days when we realized this thing can grow organically, through word of mouth, which again has a $0 CAC. And as an investor, you're looking for companies that can grow organically, or be supercharged with just a light amount of marketing spend,
Mm.
once you've really found product market fit. And we're just now finding product market fit with Pointhound, which is great, and are growing. We just 3x our user base month over month, actually. So
Mm.
things are starting to take off, which is great.
I wonder, so like since last question from me and then the rest is like the audience question. So one question is like how do you think about since you're a venture partner from another firm, and then how do you think about pitching to investors right now? And also back in time, this is such a random question, but like, how do you ship furniture from one place to the other? Because that sounds very, very cash intensive. If I were the investor, I may like already be dead when I hear about someone shipping a couch to Arizona or whatever. Like, how do you think about that?
Yeah. What was really nice about Feather in the early days was we didn't own any of our furniture in the
Mhm.
first year or so. So we worked with a partner who would actually buy the furniture and lease it to us, and then we would rent it to our users. So we were
Oh,
capital light in that case.
mm,
As we started to realize that designing and manufacturing our own furniture made more sense, so that we could have much better margins and the product would last a lot longer and it would be durable and all the different things have component parts that we needed.
mhm,
Then we took on a larger debt facility to acquire the furniture, but
mhm,
we still had very good margins as a company, which was nice. Um, yeah, so that was fun. And then as far as but this new company, we're completely asset light, right? We don't have there's no furniture, there's no delivery trucks, there's no warehouses, there's
mhm,
no anything. It is a very light a light business, not capital intensive at all for us.
mhm,
So I really enjoy that too as a founder and CEO because you don't need a ton of cash to keep the building to keep the
mhm.
business going.
So, what were the data that you guys are collecting? So, is there any legal things on that? Like, since like right now, there's like so many things that you cannot collect these days.
No, yeah, we don't collect anything other than item like data that is useful for the user to use our tools. So that would be stuff like what is your home airport? Which credit
Mhm,
cards do you have? Not the credit card numbers, but which cards do you have?
mhm,
So that we can help you get the right cards to
mhm,
earn lots more points, and so that we know how you can book the flight that you might be interested in. Should
mhm,
you take Capital One point? Should you take Capital One miles and transfer them to, you know, Virgin Atlantic to book the Delta flight? Like that should,
mhm,
or if you don't have a Capital One and we know you only have an Amex, here's the best way to book that flight you're interested in, and here's how much it will cost.
mhm,
We do all of that kind of math for you, um,
mhm,
and we also send out these daily emails for free that surface the best and craziest like deals that you can get using your points and miles,
mhm,
which have grown really nicely and users are super excited by. So yeah, we don't ask for any information that needs to be like really like secure. It's just what home airport, which credit
mhm,
card do you have, stuff
mhm,
like that.
mm. Okay, so audience questions. Oh, like sorry, forgot the lessons learned from being an investor, and then audience questions.
Yeah. Lessons learned from being an investor. I mean, I'm still an investor. I'm still an active
Mhm,
angel investor, and work with a fund. So for me, it's finding folks who are absolutely maniacal about the problem that they're solving. It's really
mhm,
important. Um, like having experience in that world is very valuable. So for me, like I went really deep on Pointhound and figured out exactly everything that was necessary to build this company. And I did that for fun in my free time for years in
mhm,
advance of building the company, and then realized that most people don't have years to figure all this out. And so how can we help people figure it out in a few days? Um, and I took all of those unique insights that I had gathered and put the product together. So hopefully, what I look for in founders is folks who have those earned insights or unique insights from doing something previously,
mhm,
because that in itself is a bit of a moat. Like you have a view of the world that other people might not have, that's very unique, and other people might not see that yet. So you have a significant advantage in getting started as someone with that earned insight.
mm. Love that. Okay, so or Stefan asked, when pitching to investors and highlighting affordability as an advantage over competition, they often assume product is inferior. Since many investors lack deep technical knowledge, they may not fully understand the value behind pricing, especially in SaaS. How can I position affordability without creating the perception that the product is lower in quality, and should I avoid mentioning it as a selling point?
What do you think, Grace? I'm curious what your answer is.
Oh, oh my God, what? So, no, this is cheating. It's
No,
supposed to be a new question. Okay, let me think.
this is
Okay,
great.
so like basically you're saying like your product is cheaper, and like investor will think, you know, like, why your product is cheaper than competitors. I feel like DeepSeek is such a good example, just because like people think about things fundamentally different. And then if the investor is like not gonna give you like not trying to actually understand why it is different, or like not investing into like the time and the energy into studying why it is different, then they're not the right investor for you. So like you want to find the people who are actually will diving deep with you, and then think about things in your kind of way, instead of forcing someone to be like, oh, like think this is cheaper or something. And then obviously people like investor supposed to be investing in things that like before everybody else sees. So like basically I feel like they supposed to be investing time into seeing if your technology is actually viable. So like you kind of want to have the conversation with the people who actually already delve deep into, why DeepSeek is using eight, sorry, forgot the term, not technical. But so like so like I guess like a traditional AI is supposed to be used like 32 different something, and then like DeepSeek is using 8. So like that's why they're like different. So like basically you need to like actually find out the investor who can actually understand this, or like at least trying to understand this. What about you?
Yeah, agreed. I mean, I think like the question, how can I position affordability without creating the perception that the product is lower quality, is, I mean, do you have proof? Show some proof points,
Mhm.
like what figure out what people are willing to pay for the product.
Mhm.
And a lot of people do kind of shortchange themselves and say like, here's my SaaS product. Maybe it's for, it's a B2B SaaS product. I think is maybe what maybe
Mhm.
what you're
Yeah.
highlighting. Like, oh, I don't, I only want to charge $49 a month because I'm I'm worried that people won't pay more. Well, there's definitely in YC they teach you to like test like very high price points to see what people are willing to
Mhm.
pay, because you can always lower the prices easily. It's not as easy to start charging $49 and then be like, oh shit, like people would pay $499 a month for this thing and raise the prices by that much. So um, don't, until you get actual feedback from users in the market, don't shortchange yourself. Maybe try
Yep.
pricing it higher and see what the market can bear, and you might be pleasantly surprised. And if not, you can always lower it.
That's a good way to think about it. Thank you for telling us to charge higher. So
Yeah, yeah,
okay, so another question from Dragon Lore. So if you have a top tier SaaS product, the SaaS community are strong today. So Jay is a consumer founder and investor, but I mean loving like people keep flowing in the SaaS questions. If you have a top tier SaaS product with the potential to become an industry leader, but lack of a team member skilled in sales and negotiation to secure investment, what's the best approach? And then her second question is like, should you offer equity to someone who can bring in investors, or is there a better strategy?
yeah. To me, there's a thread through both of those questions, which is
Mhm,
I don't believe that I'm a good salesperson,
mhm,
and I would love someone who could help sell the product and help sell my vision. And um, generally, I would say that is it's best for the founder to be able to do that, because you're the most passionate about the thing you're doing. Maybe you're not as polished in your sales pitch or whatever, but trust me, over time, you'll say the same thing hundreds and hundreds of times and you'll just get good at it. The
mhm,
first 10, 20 times, it feels uncomfortable and you're going to stumble and you're not going to know what's resonating with the person you're speaking with, but you'll figure that out pretty quickly. It's
mm,
just those initial like 10 or 20, failure, you know, like conversations where you feel like you're failing. and you might get a no from an investor, you might get a no from a customer. Those are okay. Like that happens for everybody as they're figuring out what resonates about what they're building. And if you just do it and try it, say 10 times with people, and maybe don't go after your 10 best prospects to start until until maybe you've failed a few times and been like, what does this company do that I'm like, I don't even know how to explain the thing I'm doing right now. How do I do that concisely? Try with a few people and a few customers before and learn from that. And then it just gets better over time. I wouldn't recommend bringing someone in who is a master salesperson until you've mastered the art of selling your thing yourself.
I agree with what you said about like practice make it perfect. Like so, and then also as a CEO, your entire job is selling. You're recruiting people, that's selling. You're recruiting investors, that's selling. You're recruiting customers, that's like selling. So every day you have to sell all the time. So if you hate sales, like no, this is like never gonna be should be the time that you invest in yourself to like become a better salesperson, I think.
Yeah. Exactly.
Okay, or ask Jay because I feel like Jay is a good salesperson. So successfully raised 76 million for the last company. And okay, maybe in the end, if you have any tips for the founders that are listening, like or any core lessons that you feel like people should take away, you want to do that, and then before jump into a 30-second fire round.
Yeah. Ironically, it's basically what I just said, which is
Sales.
you just have to try something. Like I think most people have great ideas. They might have unique insights, but people fail. People don't like failing. They don't like trying something and failing. And when you're doing something that has a very low success rate, you're going to fail more often than you succeed, whether it's in a sales pitch or like a company altogether or whatever. You just have to try and just get started. And when you fail at doing something, then you learn from it. If you can learn from your failures and then figure out, okay, what's next? I pitched that person, I sucked. Like, okay, that's fine. What did you suck at? What do you need to work on? Just try that again, but actually just get started. I think a lot of people get stuck in that phase, which is actually just getting started.
Okay, 30-second fire round. What's your favorite book?
Ooh, favorite book. This is man.
You have 30 seconds because you have the next meeting at 10. So
that's true. I like. It's funny. I'm not going to answer with a specific book, but I love like the autobiography genre, where, or just generally biographies, stories about people who started with nothing and have figured out, have figured a lot of things out in their lives. I love those stories. Like there's so many ups, there's so many downs. It's like life. And I like living like through other people.
It's like life. Who made the biggest impact in your career?
I think maybe I think when Dalton Caldwell from YC, one of the managing partners, accepted me into YC in 2017, I think that made a pretty material impact in my career. He's such a good like motivator. He tells you things like they are, and I think welcoming me into the YC community has just been an incredible thing for me.
Who would you invite to your dinner party?
Oh man, who would I invite to a dinner party? Anyone who wants to come, who likes good food.
Me. Okay. Where can we find you outside of work?
What was that?
Where can we find you outside of work?
Oh, you can find me outside of work. I love soccer. I go to lots of soccer games in Madrid. I'll be going next week. So I love soccer. I love hiking, biking, and you'll find me on an airplane as well because I love traveling.
Love that. Okay. Thank you so much, Jay, for coming on the show today. It was such a fun conversation.
Thanks for having me, Grace. This was fun.
Okay, let me quickly end stream. It's about to end.